Welcome everyone to another ShareCafe webinar where we connect investors and listed companies in our virtual conference room. Thank you for your support. We've got hundreds of investors online today and we have a long list of companies in the coming weeks who are going to join our webinar broadcast. They include the likes of Marley Spoon, Century Resources and Alcidion. Where possible, we like to complement these presentations with an industry expert, an analyst or a fund manager so that they can add some context to the industry or the sector or the market we're operating in. By way of housekeeping, you can ask a question. There's a Q&A button. These presentations are for 10 minutes with 5 minutes for Q&A. If we run out of time, we'll try and put together an article on ShareCafe for the questions asked by you, the viewers. First up today, we have Max Bluvband, the CEO of AppsVillage. AppsVillage provides an easy and inexpensive SaaS solution that allows small to medium businesses to create and manage their own mobile apps as a means of connecting with their customers and growing their businesses. The company IPO'd last year on the ASX, and the company was founded in 2015 in Israel. Over to you, Max.
Thank you for having me. Pleasure. I will dive directly to the presentation. So I would like to start with a key fact. Not sure everyone know, but the global economy is actually based on 90% of the small, medium businesses. It's not about the big Facebook or the Amazon or the Apple, but all our economy, and we see it very nice here, very clear in the COVID-19, is based on the small, medium businesses. However, as you can see on the next slide, if you compare and small, medium business to corporate, small business, medium business doesn't have what it takes to build a proper business. If we'll take as just an example as an enterprise, as some of the key operation, enterprise has a team, staff of 15, 20, 30 people that will take care of your mobile presence, your mobile app, your customer loyalty management, the advertising on the social networks, etc. and the financial services. So they will have the CFO that will budget all that. They will have a team of people that will commission the work to develop an app and mobile presence. They will have a team of people that will do the advertising, and we'll have the team people that will measure, do the statistics, how loyal the customers, etc., etc. And as I said, as you can see in the next slide, the SMB is quite the opposite. Usually SMBs are one or two people that are struggling to maintain the business. They are very expert in their own business. They are much less expert in marketing, in mobile, in financial services, in advertising. And we are here, in the following slide, you can see that we are here actually to solve all that and provide an easy SaaS platform for every SMB to grow its business. First, to provide them a mobile app. Most of the businesses don't have a mobile app. They're still using emails and paper flyers and text messages to keep in touch with their clientele or to reach new customers. Then they will have to do an advertising easily, and they have the ability to manage the customer, the loyal customers, and also in a click to provide them a financial effort, financial help to provide them a loan. So basically, to summarize it, when you look on AppsVillage, we've actually started with a mobile presence to provide them a mobile app with less than a minute. Actually, AppsVillage is a SaaS platform that you go to the website, you log in with Facebook, in less than a minute, the SMB, without any knowledge, without any technical knowledge, can have a mobile app to the business that they can manage the customer, that can advertise easily on Facebook and also and soon also on Google, and to get new clients, and also we make the financial loan so much easier for them. Next slide. So basically, currently we provided them the platform in a minute, and in 5 years, it will be a one-stop shop from the marketing through the reaching new clientele, and also to the microloans and banking and payments, everything for the SMB in one-stop shop. As we've been introduced to the ASX and started to be listed in late August 19, we've shown an amazing scale of number of paying customers, paying SMBs, and reaching almost 8,000 paying customers till the end of Q1 20. It's about a scale of 6,000 SMBs, paying SMBs in 6 months, which is quite amazing for a young company. If we go to the next slide, we can see also that the most of our customers are not only from the US or Australia. We have customers also from the Western countries, which is US, most of them, Australia, Canada, and United Kingdom. But we also started in Q4 to penetrate the emerging markets, Nigeria, Philippines, Indonesia, India, Cambodia, all those places that are strategic for companies like Facebook and Google and take time to penetrate them. We're already there. We're already providing the solution for those thriving markets and enjoying the enormous scale there. In the next slide, you can also see that we actually targeting all the basic small medium businesses, which is food and beverages, shopping, retail, local services, mobile phones, fashion, art and entertainment, beauty and cosmetics. And you can see the strive and the need for such tool that will upgrade the businesses from paper flyers to be as every corporate to grow the business with a couple of clicks. And the next slide, our revenue model, which I'll go fast through that, is actually based on recurring subscription. Every paying customer select their plan to subscribe, either if it $25 a month or $180 a year, or semi-yearly plan. And on the Western world, we take an average between about $15 per month from every customers, and for emerging markets, we take between $4 to $7 from each customer. The amazing thing that those 8,000 customers that pays us on a monthly basis or on a yearly basis, depends on the plan, we already have addition to that 2 more business plans that are getting on board. First, we help them to advertise on Facebook, and we take a commission between 25 to 50% on the campaign costs that the SMB is putting in Facebook. And as we discussed in the beginning, we already started to test and to provide microloans with our partners without risking the company's balance sheet. And this is already an additional 2 revenue streams that we will see, we will enjoy them from them in 2020 on top of the subscriptions. As we can see on the next slide, not only that we have now reached to almost $2 million ARR on Q1, we expect to grow and to acquire the market and follow the successful path of SaaS companies. In the next slide, you can see, as I mentioned in the revenue model, we started to pilot the advertising on Facebook for our SMBs. It's actually an AI and automatic mechanism that help them to target their potential new customers. And we see thousands of SMBs already advertised in Q4 and more than almost 6,000 campaigns ran through Facebook in Q4. We expect this revenue stream to be very significant in 2020 and for the next 2 years. Now, the main slides are now starting. For an investor in the company, the most important thing is to understand how or will this company become a big company like every successful company like Atlassian, SaaS company Atlassian, or Wix, or Xero, or GoDaddy? How do we make this a billion-dollar company? So first, we need to understand the SaaS growth model, and do we follow the same model? So every SaaS model, every company, Atlassian, as I said, and Wix, and every other company, starting by introducing the solution to the market. After they introduce the solution to the market, usually they start to optimize the value proposition, to put more feature, to understand why are those customers are their customers like the service or not, and they optimize the value, and they enrich the platform for the customers. On one point, when the lifetime value goes up, starts very low but goes up, the company either gone viral, or God forbid, the company is dying. While you go through this path, in the next slide, you can see that actually, while you invest in the platform, the technology and offering, you start with a massive investment in customer acquisition. Especially today, in the storm of the technology, you need to invest and to start acquiring customers and to penetrate new markets and to get to brand awareness. And then, while you start to do the very high customer acquisition cost, but you started to gain markets and brand and awareness, the magic starts when it's gone viral and people start talking about your platform, and then the CAC drop dramatically while the LTV goes up to the sky. This is the point when you know you're about to be a billion-dollar company. Now, most of the companies, 95% of the companies that provide any kind of product, even an amazing product, they die or they stay behind the wall of doom, as we say, already on the first stage of the CAC and the LTV. When the CAC is very high, they fail either to scale, they fail either to make customers to pay, to put the credit card. They fail that customers won't use the platform, and they die in the beginning. In the next slide, I'm happy to say that AppsVillage have passed the wall of doom, and they are proven themselves that they are scaling enormously with a lot of customers that are joining the platform from all over the world, from more than 140 countries. And for us as the management of the company, this is the most important point. To pass the wall of doom, to pass the stage that we know that we are scaling, and now it's only a matter of time until it will go viral. And then the customer acquisition drop dramatically. The LTV will keep going up, and this is the exact path that companies like Atlassian and Wix and GoDaddy or Afterpay or Zip become a billion-dollar companies. So this is the biggest news I have for this panel. And in the next slide, you can obviously see that not only that we've passed the wall of doom, but also most of our customers pick the yearly or the semi-yearly plan. It means that SMB, when he needs to decide if he spends $25 a month or he puts $180 at once on a platform at the beginning already, it means that we've targeted the right audience, but more than that, it means that we've targeted the right product for the right audience. because if you have a company that scales, they have a product and they scale, and also those customers pick the semi-yearly and yearly plan, it means that your churn will keep falling. The stickiness of the platform will go higher and higher, and then you will reach the tipping point, the viral point, much more faster. And the next slide. The COVID-19 period actually proves or forced the SMBs to understand that while the point of sale, the contact, the traditional way of selling is known for 1,000 years. Today, everyone needs to go digital. Everyone needs to have their own mobile app. Everyone must to have the capabilities to actually sell online, and everyone has to have the tool as soon as possible. And because we understand that the SMB doesn't have the expertise or the time, we allow them to have this kind of tool for an app, and to advertise on Facebook, and to sell through Facebook, and to have also a financial loan. We understand that they cannot do it because they don't have the expertise. We allow them to do that in less than a minute through our website. And AppsVillage is being very actively used with a noticeable stability in its business during those trading times. Last slide. Just to summarize it, we provide a clear unmet need for the SMBs for digital presence. Today in the COVID-19, it's only a matter of time that the SMBs will have all those capabilities we provide them. It's a disruptive technology platform that skips all the development community, that skips all the barrier of how do I do that, and how much money I need to spend. It provides them in the low cost and in minutes all the tools they need. And we already show a very clear path for growth and profitability in the next 24 months. Thank you very much for your patience.
Great, thanks, Max. We don't have any time for any questions, I'm sorry, but I know there is one particular question around Facebook integration. So what we might do, let's do that question quickly then. You integrate with Facebook. Are Facebook comfortable with you doing that as part of your business model?
Yeah, I will answer it shortly. About 2 months ago, before the COVID, before the lockdown, I've been in San Francisco in the headquarters of Facebook, and Mark Zuckerberg said that out of the 140 million SMBs, only 4 million are actually advertising on Facebook. When they see that we actually help the SMBs to advertise on Facebook, we actually answer the main strategy for the next 2 years of Facebook to make those SMBs that don't have any expertise to advertise on Facebook and to enjoy that. And we do it in a very sophisticated way with amazing technology and amazing user experience. So it fits the same goals.
Great, thank you, Max. That sounds like an exit strategy to me. But okay, next up we have Simon Lyons, who is the MD of BNK Banking Corporation. BNK Banking Corp is one of Australia's newest digital banks. It's a diversified financial services company with 2 key operating divisions in banking and mortgage broking. Over to you. Thanks, Simon.
Great. Thanks very much, Tim. Good afternoon, everyone, and I hope you're all well, and thank you for taking the time to listen to the BNK story today. Just on to the disclaimer, the usual disclaimer is, and as important as it is, I don't intend to read it to you today. You can do that in your own time. And may I suggest you do it just before bedtime tonight. But moving on to slide 3, if we can. So we don't have a lot of time to tell you the full story of BNK. So today my aim is to give you the basics of who we are and why we'd be a good addition to your share portfolio. BNK has 2 key divisions and operates 3 businesses in the banking and finance space. In our banking and wholesale division, we have BNK Bank, an APRA-regulated authorised deposit-taking institution, and we've got circa $285 million of on-balance sheet loans, just under $50 million in off-balance sheet loans, and these are funded by our current deposit base, which is circa 339 mil as at the 31st of March this year. We also have Better Choice Home Loans. Better Choice is a wholesale mortgage manager. It services about 6,000 odd brokers Australia-wide and has a current book of about 2.3 billion. It's funded across 6 different funders, including the likes of Resimac, Adelaide and Bendigo Bank and others. And it services both prime and specialised mortgage sectors. And then we have our aggregation division, which we call Finsure. It's a multiple award-winning mortgage broking business with about 1,686 brokers across the country under the Finsure banner, settling about $1.2 billion in mortgages each month. Over the last 7 or 8 years, Finsure has built a book of over 43 billion across a panel of 65 odd lenders, and that makes it the fastest growing aggregation business in the country. Just on to the next slide, thanks. So about us, well, BNK is a 38-year-old business. It started as the Goldfields Credit Union in Kalgoorlie in 1982. It demutualised and listed on the ASX in 2012. We changed its name to BNK in 2018. And BNK is simply the bank without the A. Some people say bank without the administration, others say bank without the aggression, and some people say bank without a something else, but I'll let you read into that what you will. Our stock code is BBC. I've already mentioned our 2 divisions. BNK Bank is a fully licensed, APRA-regulated, authorised deposit-taking institution. And what that means is that our deposits are guaranteed by the Australian government up to the under the Australian government deposit guarantee. Better Choice, the mortgage manager, packages up products under the Better Choice brand and funds these through 6 different lenders in both prime and specialist lending. And the mortgage aggregation business operates under the Finsure and LoanKit brands and is ASIC regulated. Finsure is renowned for putting its brokers first and is a market leader offering the best technology platform in the market to its brokers. This is called the Infinity platform. It's a very diverse lending panel, which gives brokers and their customers fantastic choice. And it offers a broad range of remuneration models, quality training, fantastic lead generation, and brilliant broker support services. This has enabled Finsure to become one, if not the fastest growing aggregation business in the country over the last 7 to 8 years. For those of you not familiar with what aggregation is, think Aussie Home Loans or AFG, and we're a competitor of theirs and probably about the 4th largest aggregation business in the country. Just on to the next slide, thanks. So BNK is now in a position where we can leverage the key strengths and complementary capabilities of each business to become a dominant player in banking and in Australian residential mortgage market in particular. We're free from legacy technology issues, which are hampering many of the bigger banks, and we have no branches to maintain. We've award-winning simple products and one of the best distribution networks of any non-major bank in the country. Just on to the next slide, thanks. I've told you we began business in 1982, but really our pivotal turning point began only a few short years ago at the end of FY16, when we set up a plan to change the direction of the banking business. Our aim was to improve our technology platform, simplify our products and processes, and enable a higher degree of straight-through processing, and also work with partners to increase our distribution footprint. So this saw us launch the Temenos T24 core banking system, which is widely regarded as one of the best core banking platforms in the world, used by 3,000 odd banks globally, and has circa 750 million customers on it across the globe. We've also integrated a number of automated measures into our technology stack to improve the services that we offer. In late 2018, we bought the Finsure and Better Choice businesses to give us access to distribution. Distribution is one of the biggest things that small banks struggle with. And what we wanted to do was get access to distribution to enable us to accelerate the growth of our higher margin on-balance sheet lending. We've tested this model, and as you'll see in future slides by our growth, we know it works. This year and beyond, our focus is on the key levers of profitability, and that is more on-balance sheet lending and lower our cost of funds, as well as using the extraordinary amount of data that we capture through our network to build products that work for our customers. We're also pursuing a variety of warehouse funding and securitisation opportunities to diversify our funding mix whilst we expand the bank offering. Just on to the next slide, thanks. So this slide aims to give you some sense of how well our model works, and this is just comparing the first half FY20 against the first half FY19. Group income up 57%. BNK Bank settlements up 266%, which facilitated BNK loan book growth up 50%, whilst maintaining a disciplined credit focus, which is reflected in our loan loss rate in the bottom left-hand corner there, which improved also from one half to the next. We've also been successful in reducing our reliance on term deposit funding, which is our most expensive source of funding, by growing the lower cost transactional accounts, that is getting more accounts on board. Most pleasingly though, we've done this all and made it profitable. Sustainable profitability is a key goal for us. Across the group, loans under management rose 17% for the half versus the same previous period. So if you move on to the next slide, this slide just shows you the quarterly loan originations, which are seasonal, but again, seasonal, but again shows you we're growing the book substantially. The total loan book now stands at $46 billion at the end of March this year, and we aim to continue this growth. Just on to the next slide, thank you. The end of 2018 was a great turning point for the business, and as you can see, the consistent trend of increasing revenue growth happened when we improved our distribution footprint with the merger of Finsure and Better Choice. The focus now for us is really flattening the cost curve to further improve our profitability. We still have investments to make in the business, but it will be at a slower pace over the next few years, giving us true operating leverage. Our distribution capability, as I mentioned, is amongst the strongest outside of the major banks in Australia. We can now use this to really drive the on-balance sheet lending whilst maintaining disciplined credit quality in the prime residential market. If you move to slide 10, you'll see our current market cap, and you may be surprised that it's a mere $40 million. And we certainly don't believe this adequately values the bank, let alone the aggregation business, which on its own has circa $11 million of EBIT. The green line represents our portfolio growth, which is improving our profitability as we grow. We're a profitable banking business with massive distribution, quality products, and legacy-free technology. In my view, under any normal valuation mechanism, we would be undervalued. If you like to compare our business to that of the new neobanks, who are many years away from profitability, and look at the valuations they're achieving, you too may see there's a lot of upside for us. Just on to the next slide, please. So just sort of rounding that out a little bit more, here I hope to sum up what is, I believe, a really compelling investment case for BNK. We are fast growing with a lot of recurring revenue now driving profitability. Net income, as I mentioned, was up 57% in the first half 20 versus the same period year on year, and continues to grow. We have a massive branchless distribution network. Unlike the major banks, we don't have to sustain branches. We've got a digital model that goes to the market via brokers. We have 6,000 brokers through Better Choice and nearly 1,700 brokers operating under our own Finsure banner. Better still, we only pay commissions when we actually fund the loan. And so it's a true variable cost structure for the bank. Our balance sheet settings are strong, and the share price at 40 odd cents is well under our NTA backing and a fraction of our book value. We now have operating leverage that will improve profitability over time, but we've retained incredible flexibility in our business model to meet the changing needs of the market. And this has never been more important than now during this COVID environment. The good part is we're not a one-trick pony. We have a very diversified revenue base. We can get income from a home loan no matter where it's generated across the network, either direct to the bank, via Better Choice, or through the Finsure broker network. The diversity of funders actually means if we can't get you a home loan across one of our funders, you probably can't get a home loan anywhere. Data is immensely valuable and hard to find for smaller banks. We're settling between 1.2 and 1.4 billion dollars of loans a month, each month, and that's an enormous volume of data, an enormous amount of information. It allows us to see what loans are selling, where and by whom. This allows us then to manufacture products that we know will win market share, that we know will appeal to the market, and we've proven this works, and that's why the volumes have increased so substantially on our on-balance sheet lending. Just moving on to the next slide, thank you. So COVID-19 has impacted every business in Australia, and we're no different. We're pleased with our response to COVID-19. Our staff have operated from home now for many weeks, and pleasingly, our productivity has not been impacted. Even more importantly, our staff are safe and well. We've had an increased number of hardship cases, and we're working through that with our customers to help them through this difficult period as well. Thankfully, the impact on our portfolio to date has been minor, and we don't appear to have been impacted to the same extent as the major banks or the larger banks. We are very well capitalised, having raised money at 60 cents just ahead of the crisis, and our liquidity position is strong, and we've stress tested the portfolio and are very, very confident that we'll survive and thrive post the COVID period. Just the next slide, thank you. So no slide, no good company presentation is complete without the brag slide, and I'm pleased to say we have a lot to brag about. Every business across the 3 businesses that we have been award winning. BNK Bank won 2 awards recently for the best small business everyday account and the best pensioner account. Small business and self-funded retirees are very much part of our target market, which is enterprising Australians. And we also won the award for the best retail solutions provider. So in the same series that Macquarie Bank won 3 awards, we won 2 of the same. So pretty pleased given the difference in market capitalisation between the 2 of us. Better Choice was named the best non-bank lender of the year at the Australian Lending Awards for 2020. And Finsure won the award for the best aggregator of the year at the same time. Year on year, the awards keep coming for us, which is reflective of the effort that we put in to look after all of our customers and make sure that we look after the brokers who serve them as well. As I mentioned before, brokers are our prime means of servicing the broader Australian market. And just on to the last slide if I could. So hopefully I've given you a sense of the quality of our business and the fantastic opportunities that are ahead of us. It's very hard to cram our story into 10 or 12 minutes or whatever it is. But perhaps you can also look at the profile of our highly experienced and professional board, which I think is reflective of where we see ourselves going over time. We're chaired by John Sutton, the former chairman of, the former managing director of BOQ and Bank West. We have Don Cook, who is our deputy chair, who led ING Direct into Australia back in the early 2000s and has been probably the best known veteran of digital banking globally with all of his experience across the globe. We have Peter Hall, who is ex-GE Capital, ex-Genworth, who is probably one of the greatest credit experts in the country. We have John Calenda, who's the founder of the Finsure business. And we also have John Denovan, who's the widely regarded as the leading compliance and regulatory lawyer across the country. I hope you can see the value and I hope that you come on board as an investor in one of Australia's fastest growing banking business. And I thank you for listening.
Thanks, Simon. We've kind of run out of time, but just a quick question. Who's your target client or customer? Do you ultimately aim to take on the big boys?
Yeah, look, we take on the big boys now. I mean, anybody can. There's 100, and most people won't know, but there's 140 odd banks that compete in Australia, and 90% of the market is dominated by the big 5, and the rest of us are fighting over the 10% market share. Ultimately, our customers are what we call enterprising Australians. So we look after a lot of small business, very small businesses, through to businesses with turnover of circa 5 mil odd. Self-funded retirees, self-employed contractors is really the target market for BNK, and that's where we're winning market share and winning it quite dramatically.
Great, thanks Simon. Thanks for your time. Next up, we have Keren Paterson. She's the MD and CEO of Trigg Mining. Trigg Mining is looking to secure Australia's sustainable agricultural future through the exploration of essential potassium fertiliser or sulphate of potash, which is necessary for global food production and human nutrition. Over to you. Thank you, Keren.
Thanks, Tim. As you said, we are helping to secure the world's most nutritious food sources by exploring and developing long-life, low-cost primary sources of organic sulphate of potash. Can we skip 2 slides now, please? Next slide. So where are we? Firstly, we are really well positioned to rapidly respond to this growing demand for high-quality fertilisers. We're in Western Australia. Projects are really well located for infrastructure, both transport and energy. We're about 170 kilometres east of Laverton. And one of our key project, in fact, sits adjacent to the Great Central Road, which takes you through from Laverton in Western Australia through the Northern Territory to Queensland. And also access to rail. So Leonora is a railhead, which then provides us opportunities to export through Esperance, Perth, and even into the East Coast via rail. Our projects are about 1,600 square kilometres. And across those two, we've been very busy. So we listed in October last year. And since then, we've been out and drilled across most of the tenure, heritage survey and pit sampling. And that pit sampling identified the high-grade discovery at Lake Throssell, which we'll talk more about shortly. And at Lake Raisin, we announced our maiden resource there of 6 million tonnes of sulphate of potash. So we've been very busy, and we'll talk more about what we're about to do shortly. We've also got a very experienced team and passionate exploration and project development team successful in finding, developing and operating sustainable mines in Western Australia. Next slide. So why sulphate of potash when we're so used to exploring for metals here in Australia? Well, it's really fundamentally important for food supply and food security. It is an essential fertiliser for high-value chloride-sensitive crops such as your fruit, your vegetables, avocados, coffee beans, grapes, tree nuts, cocoa, and anything grown under glass. And also increasingly important in arid and acidic soils. It is essential for all living things. Potassium promotes resistance to disease, drought and frost. It improves quality, taste and appearance, and is required in large quantities for proper plant growth and optimal crop yields. It also has the added advantage of sulphur, which is also necessary for the formation of chlorophyll. So it makes this a very clean, efficient fertiliser that every tonne of product put on the soil is consumed by the plants. The alternative potassium fertiliser that we hear about mostly in the headlines, because a large quantity comes from like Canada, Belarus, Russia, is muriate of potash. It is a bulk, this one is a bulk commodity, where sulphate of potash is a niche commodity. Potassium chloride is cheaper because it is a bulk, but it contains 50% chloride. And this is what's detrimental to most crops, and particularly in soils that can't tolerate or don't have the rainfall to flush it through the system and into the riverways. Next slide. So demand is driven by a number of mega trends. We are increasing the world population. We are reducing our area of arable land quite significantly and rapidly, in fact. And fertiliser application rates need to be increased consistently because we are depleting those arable soils, which all leads to growing demand. At the moment, the global demand for sulphate of potash is 7 million tonnes, and that's growing about 3% per annum. Next slide. The key also for a project and for exploration discovery to turn into an economic deposit is to make sure that what you're looking for is going to be sustainable economically. Brines only make up 1/3 of the world's demand. So we are manufacturing potassium sulphate, putting it in a Mannheim process, which is where we add, put potassium chloride with sulfuric acid, heat it to about 800 degrees to create this ion exchange and produce a chemically created sulphate of potash product. But the brines have this natural endowment, which is solar evaporation. And also the minerals are already dissolved in water. So there's no open pits, there's no digging, there's no crushing. It's a matter of defining what's in the water, in the ground, pumping it out and and putting the sun to work, essentially, harvesting that solar energy. So they come in at the bottom end of the cost curve. Next slide. So how does it get there? I've talked about we're looking for water, essentially. We're looking for salts in the water, these mineral salts that contain potassium. And how they've got there over millions of years, the rainfall has dissolved minerals from the catchment areas, and it's concentrated in these paleo valley systems, ancient valley systems. With the evaporation rate, and here in the goldfields on the edge of the desert, Gibson Desert, Great Victoria Desert, we have about 3 metres of water evaporation every year. So that's concentrating all those minerals into this system, and it's still active. And the extraction process doesn't interrupt that depositional environment, so it also makes it incredibly sustainable. Next slide. So as we've mentioned earlier today, everyone has been impacted by COVID. We're no exception to that. Our projects, especially our Lake Throstle project, is in traditional owner country. We have been very respectful of our traditional owners and their request is in March when COVID came to Australia and we were closing things down to not come to country. So our board and our response to that is, in the short term, we've reduced all of our costs, reduced our outgoings to preserve our cash as much as possible, because we are ready to go out and drill Throstle and drill that high-grade discovery. So in the background, we've been continuing to prepare the approval process for that. We already have the program of work approved, and we are looking forward to when we can get back to country, which I hope is not too far away. Next slide. Because it's all about this high-grade discovery at Throstle. So at the end of last year, when the guys went out and did the hand auger sampling, we took 16 samples and consistently they were high-grade results. In fact, they're even up to 14,800 milligrams per litre, which makes this one of the highest grade new SOP discoveries in Australia. Next slide. And we have backed this up with a gravity survey. So the gravity survey was helping us to define that paleo valley system that lies underneath the lakes. So the water is just below the surface and it goes down into this ancient riverbed system, and the gravity survey has given us an indication that we have many of these targets under the lake on our exploration tenement there. So we're going to go out there and do about up to 30 holes. It's quite quick and quite cheap because this is air core drilling. It's fairly shallow for most mineral deposits because the water is fairly close to the surface. Drill around about 100 metres per hole. POW's approved, and we are just waiting for those travel restrictions. So currently we're working with our traditional owners on a plan to get back to country. Next slide. Lake Raisin is a little bit more advanced. We were able to announce a mineral resource estimate on this after some drilling at the end of last year. This is a project that will become part of a bigger story around Lake Throstle. So we anticipate Lake Throstle being high grade and of a similar scale in volume and water as what Lake Raisin is looking like from the area. Could be the basis of our production point. So Lake Raisin will become a satellite project. It is a great project. It's a fantastic lake. It's like 200 square kilometres of salt lake. So we've got plenty of space to put evaporation ponds on and infrastructure as well. This is not very far from the Tropicana gold mine. And in fact, the Lake Throstle project is also not very far from the Gruyere gold mine. So we've got some fabulous neighbours in the area too. Next slide. So just summing up, since listing in the beginning of October last year, we've been very active. So we've been out, we've got the heritage agreement, the hand auger sampling with the high grade discovery at Throstle. We've drilled Lake Raisin and come up with a resource estimate for that one. And the next few steps for us after this gravity survey is to drill Lake Throstle and identify our first mineral resource estimate there as well. Next slide. The team, as I said earlier, a passionate and experienced team. I've been in mining for the last few decades, working predominantly in the Eastern Goldfields. So this is my backyard. I'm a School of Mines mining engineer, and my purpose is to build mines communities can be proud of. Our share price, we have taken quite a hit over the last couple of months. In fact, we hit just over 2 cents about 2 months ago, 6 weeks ago, but we have recovered to about 8 cents. So our market capitalisation at 4.6 million with these two sizable projects provides us with plenty of leverage for upside. Next slide. So in summary, we have really strong global fundamentals for sulphate of potash. This is an essential mineral fertiliser. We're in a very low risk jurisdiction in Western Australia, and we have a strategic land holding of 100% ownership across the two projects. Really well supported by infrastructure. Everything is pretty much there on our doorstep to get the product to market. Lake Throstle is a high-grade discovery, and we can't wait to follow up that with drilling. Lake Raisin is a substantial resource in its own right, and that will support bigger picture development there at Lake Throstle. We're highly leveraged to growth, and we have that fantastically motivated, experienced team to do this. Thank you.
Thanks, Keren. We've just got a couple of questions, actually. One, how important is it for Australia to have this domestic supply of fertiliser, for want of a better word?
Oh, it's a great question, Tim, because Australia imports all of its potash, be it muriate or sulphate of potash. We are completely reliant, and especially with the growing awareness around logistics and supply chains, it would be incredibly beneficial to have our own supply of potash, especially
Yeah, I'm not sure whether my sound or your sound, but there was a little bit of problem with the sound there. So what's the feedback from, say, the farming community about having a domestic source?
Really interested, talking with the farmers. A lot of the farmers in Western Australia are in fact shareholders in the IPO for Trigg, and many of them can't wait to see WA product, because the products they're purchasing are and a long way away.
Right, okay, great. Thank you, Keren. Thanks for your time. Next up, we have Richard Bevan, who is the MD of Cassini Resources, which is a precious metal developer and explorer headquartered in Western Australia. The company's flagship project is West Musgrave Project, which is a new mining camp with 3 existing nickel and copper sulphate deposits, with a number of other significant regional exploration targets already identified. Thanks for your time, Richard. Over to you.
Yeah, thanks, Tim, and thanks everyone. I hope everyone's safe and sound. And as Tim said, we have got a really significant sort of project, but I'd like to talk to you probably today more about our Yarrawonda Brook exploration project, where we've got a pretty strong program over the next couple of months. So if we could just flip through, thank you. The next slide's just a disclaimer, which is small enough that you can't read it. So just a quick snapshot of Cassini. We're a 40 mil market cap company, ASX listed, based in Perth. Our primary project is our West Musgrave project, and that's a project that we have with our joint venture partner, Oz Minerals, and it's currently at feasibility stage. We've also got a couple of other exploration companies, and the DNA of the company is very much around exploration and bringing these projects through. We're quite well funded. We've got $7 million of cash as at the end of March. We don't have any funding liability for the development of the West Musgrave project until our joint venture partner delivers a bankable feasibility study. So really all that capital is into our other sort of earlier stage exploration projects. It's interesting to note, with a market cap of about $40 million, it's about where Chalice was prior to the Julimar discovery hole, which we'll talk a little bit about because it's quite proximal to our Yarrawonda project. So they've currently got a market cap of about $350 million, I think, post a cap raise. So this is really, I guess, the opportunity, and we see very much that Cassini's got a foundation sort of valuation based around the West Musgrave project, but really provides some shareholders exploration upside, so that opportunity of a near-term increase in value around discovery. So perhaps we could just flip on to the next slide. So the Yarrawonda Brook is a project that Cassini has had. It's just north of Perth. It's got excellent infrastructure, as you'd expect, which is a bit of a change from some of our other projects, which are far more remote. Chalice had drilled a discovery hole at Julimar, which is about 40 kilometres to the south, and that was sort of late March, early April this year. we've been out there for the last couple of years. We've got a number of prospects that have had historical exploration with some good results that we're currently progressing. I think more the exciting thing for us is that we've now had a little bit of a paradigm shift in some of our exploration targeting, and that's really providing us a lot of opportunity over the next couple of months. We've got a really strong technical team. I can say that because I'm not part of it. Even though we're the minor party in the West Musgrave project, we've run all the exploration and the technical expertise around the geology. So we've learned a lot of lessons in the West Musgrave, and really we're applying them to a new sort of underexplored province at Yarrawonda Brook, or what we're calling the new North Sea Nickel Province. And you know, I think the opportunity here is that potentially this could be an Albany-Fraser range at the start. You know, we've seen now when the analogy with serious drilling, that discovery hole, a lot of parties coming in to spend money on the ground and really explore this area in a way that's never been done before. Just next slide, please. And this gives you some example, I guess, of the land rush that's occurred over the past sort of 3 or 4 months. So the slide on the diagram on the left is sort of just January 2020. Cassini actually pegged a number of tenements prior to or during the exploration work that we did in December and January. So we're very comfortable with our land position there. And you can see now that it's become a lot more crowded. So Cassini's got about 400 square kilometres of what we believe is sort of the most prospective geology. And there's now been a big rush, but we think we're really well positioned to having had the opportunity to pick the eyes out of the available land there. Just moving on. So there's a fair bit of historical work that's been done on this project, but it's all been really targeting, I guess, very shallow platinum and palladium mineralisation. So you can see on the map there, there's a number of those black holes, which are really very shallow air core holes that drill to about 50 metres. So Cassini, we had an exploration program on the ground there sort of late last year and early this year, really following up some more sort of EM conductors and doing some deeper drilling, targeting more nickel and copper. And really the PGEs are really a pathfinder or a halo around some of these nickel and copper systems, and that's really the target of what we're looking for. The program that we did in January identified a new prospect, Brassica, which is about 4 kilometres from the existing mineralisation, and started to open our eyes to the really, I guess, the opportunity within the project. So looking beyond just the local prospect that had some historical exploration and moving into a much broader exploration program. So just moving to the next slide. Really, our strategy has been to target these high-grade, massive nickel and copper sulfides. So the program we had in January, we had some diamond drilling that intersected some thin zones of this nickel-rich, massive sulfide mineralisation. Interestingly, it also intersected very broad zones of disseminated mineralisation. So the thickness and the volume of that intrusion, or that mineralised intrusion, is a really important indicator of the size of the system and the opportunity and I guess the probability of it being economic. So even though we found some higher grade zones, the system that it sits within, we think, has much broader appeal. All those zones were reasonably shallow. So most of our drilling sort of was in that sort of 100 to 200 metres. And they, as you'd expect at this stage of a prospect's development, all those remain open along strike and down dip. So just moving on. So the current program we have at the moment, we've got a diamond rig on the ground. Currently, it started drilling yesterday. We've also got ground EM crews on the ground targeting some of the new extensions, or sorry, some of the existing work that we've done, and also some of the soil sampling work that we've done. So once again, great opportunity for us to get out there and follow up some of these targets. But I think apart from some of these extensions and these EM plates that we're targeting with this program, there's also the really big significant shift is some success we've had around the soil sampling. Just moving forward a slide, it's what that's done is really, I guess, for us, be able to generate some really high quality targets. So the general view around soil sampling in cultivated land was that it was pretty ineffective, but we've now run a series of programs that shows that it is significantly effective. And you can see on the map on that right-hand side of the slide there in the red dotted line, there's some significant nickel and copper and PGE anomalism, probably 10 times the amount of the background anomalism for those metals. And when you get a soil anomaly and an EM anomaly, that really does increase the priority on those targets. So we're finding it's a very low cost way of targeting and I guess providing some value for us in terms of broadening the project area and the search area. So that surface EM is currently underway, and we're expecting those results to come in over the next couple of weeks. We have capacity within the program that as soon as we are able to generate an EM target, which will help us site a drill hole, we can swing that drill rig on and look to test that target. So it's a very exciting time for us. This is all evolving. And it's good that, at the moment where we've got some restrictions on some of the places we can do exploration, we've got this opportunity close to Perth to do that. So just moving on. And this probably just talks a little to the soil geochem. At early stage exploration, it's a very cost-effective tool to generate targets. For us, it's led to detection of direct mineralisation, but also it's allowed us to detect some of these bedrock lithologies as to what is a potential mineralised intrusion and what is not. So previously, a lot of the intrusion had been mapped with magnetics. We've now found that some of the ultramafics or mafics are not magnetic and don't show up, so they're blind to the magnetics. What this has now done is shown us through the soil geochem that we are getting anomalism over areas that previously we hadn't thought were prospective. So by coupling the soils and the airborne EM, it really is a powerful tool for, and really a cost-effective tool, I guess, for examining and generating some of these targets. So just moving forwards. So the work to date, we've really been, I guess, a bit more prospect focused over small parts of the project. But as I've said, the exploration strategy has really lifted our eyes and broadened the opportunity across the entire project. We're now well underway with a very systematic approach to collecting these new data sets and exploring the package with probably a different sort of paradigm. So there's a fair bit of soil geochemistry going on. There's some EM, airborne EM programs being flown, also with some ground EM programs that are being done over specific targets. And then lots of other technical work going in that we feel will help us generate some really high priority targets for the coming program. And we're running that in parallel with the existing drilling and work that's being done on the ground now. So just moving on. So I guess, what makes Cassini such a great investment case? I think, the parallels, the market is still very interested in nickel discoveries. I think you just need to look at Chalice and look at Legend Mining to see that, if you can get a significant hit of nickel sulfide, the market is rewards that. I think, the Yarrawonda province is really shaping up to be a significant new province. We're in the right address. We've got a good land package. We know we're in the right geology. We've had a bit of an advantage, the fact that we've been there doing some work for a bit longer than some of the others. And we think some of this early success we've had and the way that that's allowed us to develop our targeting strategy will really hold us in good stead. We've got an excellent team, as I said before, a lot of experience in nickel and copper sulfide exploration. We're well funded, so all these programs are relatively low cost, and we've got a strong enough cash balance that we can progress these to the next sort of technical hurdle. We've also got some other exploration projects in gold, which we feel is a natural hedge for the base metals that we'll get to later in the year. But from an investment point of view, I think we just see that it's a very low risk investment for an exploration company. a lot of our value is underpinned by the feasibility study that's currently underway at the West Musgrave project. As that progresses, we'll see more value reflected into our share prices. The risk is mitigated and we get closer to a decision to mine. And you know, we've got this great opportunity in the near term around some exploration success. So we really see that it's a great opportunity, and we'd love investors to come on the journey with us. So thank you very much for your time.
Thanks, Richard. We've got a question here from an investor. On the Nebo Babel project, how does a small company like Cassini fund such a large project?
Yeah, look, I think the focus for Cassini, I guess, is realising value for that project. The exploration is one of the strategies that we've got of doing that, and you've seen that in the sort of paradigm shift with Chalice. You know, they were a 40 million market cap, now they're 350. So in terms of how Cassini funds as part of the project, that's one of the opportunities for us to deliver value. We've got a very supportive partner with Oz Minerals. We've got some supportive shareholders that have strong links to people who are end users of the product. So there's a range of options for Cassini, and we believe the project is strong enough that Cassini can realise value through maintaining its 30%. But you know, I think this is where actually the exploration strategy really complements that funding strategy around the development asset.
Great, thank you, Richard. That's all we have time for today. We've had some great presentations. Next week, we'll have another 3 to 4 companies present. There will be a copy of this webinar has been recorded, so there'll be a copy available on ShareCafe. There'll also be copies of the individual fund presentations on the company profile pages that are found on ShareCafe. We'll send that out to all attendees and registrations. So thank you for your time. Have a good weekend. The pubs are open, the restaurants are open, and the cafes. Enjoy your weekend. Bye.